Good afternoon and welcome back to the Money Control live stream. You are watching Markets with Santo and CJ. Well, our markets have turned out to be much more resilient than I gave them credit for earlier in the morning. I was expecting a battering on the street today, but we have come off very sharply from the day's low. At this point of time, Nifty and Sensex are trading about 0.2% lower as compared to almost a fall of 1% earlier in the day, Santo. And which are the stocks that are helping them out? FMCG stocks are the biggest, enablers of this recovery that we are seeing, apart from heavyweights like RIL, HDFC, as well as HDFC Bank. So the big guys in the index are doing the heavy lifting and possibly trying to make sure that the markets end up in the red. In the green, I beg your pardon, despite the sort of bad cues and the weakness that we are seeing in the European markets.
Well, it's surprising, even the bears don't seem to be, pressing in for the kill as one would have thought.
Yeah.
Probably it could have to do with the fact that tomorrow is a trading holiday and nobody wants to go into a holiday with position. So perhaps, the bears would have made use of the early morning weakness to kind of square up their positions. Also, CG, another interesting trend which is now playing out is the whole change in, outlook towards tech stocks, despite the fact that the overall the order pipeline and all remains fairly strong.
That is true. I think also the fact that the market did not substantially crack below the 17,000 level, and we have seen this for 2 consecutive sessions now, that the market has been staying around that 17,000 range, and that is probably bringing a little bit of nervousness in the bear camp, and that is probably the reason why we have seen the short covering that we have.
It's a bit of a stalemate for now, I would say.
Possibly. That said, I think we should quickly dive into the stock action, and there was a lot of it. Starting off, I started off the day talking about Yes Bank, and Yes Bank is again the stock that was probably one of the most buzzing stocks in the trade. The stock surged over 5% in trade after a very, very strong quarterly numbers for the March quarter. That said, the obvious question now is it time to take a little bit of a profit off the table? If you go by what technical analysts are suggesting, Santo, they are suggesting that probably every rally at this point of time should be utilized for taking profits or pairing your holding in Yes Bank, especially if you have bought it at lower levels, because you have made considerable gains over the past 6 to 9 months. So very interesting thoughts coming out there.
CJ, I wouldn't blame the technical analysts for that. Just look at the graph of the stock over the last 2 years, starting from March 2020 to about now we are in May 2023. The stock price really hasn't gone anywhere. It's been pretty much very, very range bound.
But so, Santo, you should also consider that one of those years was probably the worst in bank's history, and the fact that it has still remain in that range, I would have feared that probably after a crisis year like 2019-20 and 2020-21, the stock would be probably in single digit, maybe less than 5 rupees. So after credit where is due.
Yeah, but then after such a big improvement, I mean, from where it was in March 2020 and now, the stock price is still pretty much the same. I guess one of the reasons also is that there is this overhang. A lot of investors, were forced to
had bad experiences.
No, they had to hold only. They could sell 1/4. Anyone holding above 100 shares could not sell their remaining shares, and that will come into the market, sometime next year. So all these factors too are there. So it's not exactly, I would say, at best it could be a bargain, but nothing more than that, CJ. Next up, IndusInd Bank, good set of numbers from the IndusInd Bank. The net interest income and net profit was slightly ahead of what analysts were expecting. Also, quite a few brokerages have upgraded their price targets as well as earnings estimates for IndusInd Bank. Now, the key takeaways is that the collections in its microfinance segment as well as in its commercial vehicle segment have shown a considerable improvement, and also analysts expect credit costs for IndusInd Bank to normalize.
Thank you for your point, Santo, but I would just draw your attention to what Kotak Institutional Equities had to say. The brokerage has retained its sell rating on the stock, and although it has upgraded the stock price and it has said that there are things that are to like in the March quarter performance, the key thing is that Kotak believes that the best of the earnings growth is probably beyond IndusInd now. And what will happen going forward is probably it will just perform in line with industry. But there is no way that it is going to outperform the industry, despite the management suggesting that they will grow its loan book by 15 to 18% in the current financial year.
Well, Kotak seems to be in a minority for now, but anyway.
That said, talking of minorities, Rupa, Limited was one of the probably the most sought after stocks in trade today. The stock was up about 5.5 to 6% in trade after progressive share brokers basically initiated coverage on the stock with a buy rating. Now, the brokerage house is basically seeing about 16% gains in the stock despite the 6 to 7% move today, in session, Santo. And the reason is pretty simple. Rupa is a textile play, it's an apparel play, and it is also benefiting from the reopening of the economy. While when we are venturing out, we probably need more undergarments to wear and people are refreshing their wardrobes. So that is the play out here. And, overall progressive brokers basically expect that Rupa is also trying to sell more premium products, in its overall portfolio, and premium products generally mean that there will be higher margins going ahead. Apart from that, there is a possibility for Rupa to gain market share as well. Why? Because Rupa is going big time on direct to retail. They're partnering up with internet platforms such as Amazon, Flipkart, and all to bring their product as close as possible to the customer, and probably totally extinguishing the modern trade network. So these are a few of the factors that probably work in favor of Rupa, and the stock price action is clearly showing we are up about 7.5% today.
Well, I take all points except one, CJ. I can understand that people wanting to buy new set of clothes because the economy has reopened.
Yeah.
But I don't think the same holds true for undergarments, does it? I mean, people use it irrespective of whether they are going out on. No, CJ.
Some people, in the privateness of their room, some people want to enjoy some liberation.
Okay. Dr. Pathlabs and Metropolis Healthcare, the other stocks which were under pressure today. Now, Dr. Pathlabs has been under pressure for quite some time now. Overall, these stocks had enjoyed good tailwinds during the COVID pandemic because testing was up, and now that the pandemic has receded, people are probably taking some money off the table. Also, not to mention the fact that quite a few leading players are also now getting into the diagnostic space, which makes it matters tough for players like Dr. Pathlabs and Metropolis Healthcare.
Yeah, but the only argument here is that while margins are suffering because of competition, they are still trying to push up the game in terms of going more into wellness. See, the COVID totally detracted them from the earlier pre-COVID growth trajectory of moving into wellness side of the the diagnostic business, and that was a very high margin business, right? Now, hopefully with COVID behind us, and we'll see normal testing, operation resume, normal wellness operation resume. It is possible that some bit of margin recovery may come in, even though there is still that concern that more competition, especially from those diagnostic players that are funded by private equity guys. So they have, deep pockets. So that concern will always be there. But the general, feel for the industry is that in a 5 to 10 years, space with healthcare overall, increasing as a percentage of GDP, diagnostic players will probably be one of the proxy ways to play into that theme. Moving on, Dixon Technologies. I know, Santo, you want to gloat about this, given that you were very vehemently against the stock not so long ago. Well, stock cracked, and how? The reason for the decline basically was that Enforcement Directorate yesterday came out and said that they have seized some of the assets of Xiaomi India. Now, Xiaomi India is one of the biggest client for Dixon Technologies. What Dixon does is it manufactures screens for Xiaomi India, in India.
Almost 20% of it comes
exactly. And it's basically probably the biggest client that Dixon has. Now, with the biggest client under the lens of the government enforcement agency like ED, there is concern emerging over whether Xiaomi will be in position to pay for some of the goods that it has already purchased, and what happens to the future orders that they were, or probably Dixon would have already started working on. So there is a lot of uncertainty. However, the management did come out with a statement saying that the goings on at Xiaomi will probably not have any adverse repercussions for the company, especially in terms of payment of the goods that have been already supplied. But the market is not convinced. I mean, you can see it in the stock price performance today. It was down about 8 to 9% when we came live, and I don't think that it has recovered from those lows. And it seems very unlikely that we will see any recovery on the stock anytime soon.
Well, also CJ, what's working against the stock at this point is its pricey valuations. Now, that's trailing 12 months, it's about more than 100 P, and even if this year it were to grow its earnings in a big way, it will still be in the vicinity of 100. Now, the question here is that for a company with a 3% profit margin, why would you want to pay such a expensive such high valuations? The stock is very overowned. It was one of the most fancied stock, and now it's coming to bite. Suddenly when sentiment turns, you've got too many people rushing for the exit door at once. So that's what's happened.
Yeah, you have me there, Santo. You have me there.
Yeah, HDFC announced its quarterly numbers a short while back. Again, numbers slightly ahead of what market was expecting. There were some concerns whether the merger with HDFC Bank would go through. That's been clarified by Chairman Deepak Parekh also in an interview to moneycontrol.com. Besides, Mr. Parekh has also said that he has not seen such strong demand for homes, so far in his entire career, the way he's been seeing it now over the last year or so.
Yeah, but the concern again comes back to the entire merger thing, and at this point of time, there is a valuation reset that is happening at HDFC as well as HDFC Bank. Now, because the merger ratio has already been announced, that means that these two banks and their stock prices are now intertwined till the time the merger takes place, which is still what, 1.5 years away from here. Now, the main gripe of the market now is that you're seeing the price to book value for both HDFC Bank as well as HDFC coming down, because there is competition in the NBFC space, there is competition in the banking space. Because let's remember, unlike the past decade where PSU banks were just basically gifting away market share because of bad loan crisis, they are now in a much better position. Their balance sheet is in a much better position, and therefore for banks like HDFC, it will not be so easy to sustain the premium market share that they were winning away or pricing away from a lot of the PSBs. So that is one concern. Now the other concern is that a lot of investors are a little unhappy when it comes to the timeline for the merger. They probably thought that this merger should have happened a lot earlier. It has happened, so good and all, but they were expecting that probably this would take not more than 9 to 12 months, which is generally what the timeline is for a substantial merger like this.
They're very impatient, CJ, I would say, because the merger of this scale, I mean, it's a pipe dream if you think that it will be done in about 9 to 12 months.
Yeah, but I don't think that overhang from the stock is going away anytime soon, despite the sort of earnings that the company has come out with.
Tata Chemicals,
Tata Chemicals. Coming back to my list. Thank you, Santo. Thank you for the reminder. Tata Chemicals was surging in the trade today, and why not? I mean, it surprised everybody on the street with its Q4 numbers. Nobody were expecting Tata Chemicals to bring out the sort of margins that they brought out, knowing the fact that a lot of chemical prices were a little volatile in the March quarter because of what was happening in Russia, between Russia and Ukraine, and what that had to supply chains across the world. Apart from that, Kotak has come out and put its head on the line and upgraded the stock to a buy, and their argument is that the earnings strength that the company is displaying displayed in the March quarter is something to really take notice of, and that is probably going to help the stock in the coming quarters as well. And apart from that, now we remember with the latest launch of the the prototype for of EV by Tata Motors, Mr. Chandrasekaran mentioned that they want to produce batteries or battery storage in-house, and that is like the best news that can happen for Tata Chemicals, and that is something that a lot of the investors were trying to ascertain whether Tata Group will actually look for in-house capacity in terms of battery development, or would they go look outside. Now that clarity has come, probably there is much more possibility of a re-rating on Tata Chemicals, and that is something that the market is already sensing today.
Even something needs to be just spiced up a little bit, add either green or some electric vehicle angle to it.
And come on, you're always so skeptical. It's the future that we are talking about. Everybody wants in on the future.
It is just that people are suddenly reminded of the future the day the company announces the results, and within a few days later.
It's not just on the day of the announcement. Even last week we saw some good movement in Tata Chemicals.
Shriram City Union Finance, again a fair bit of a good set of quarterly numbers from the company. MK has upped its price target for the stock to rupees 2700, and it said that it's a play on retail financing across various segments like MSMEs, two-wheelers, gold and personal loans. And MK is of the view that the merger with Shriram Capital is on track, and also that the company can leverage from Shriram Capital's customer base. So, many factors going in favor of the stock at this point.
Well, it's hard to agree, disagree with that. Some of the Shriram Group companies are actually coming back into the limelight. I mean, not so long ago, we mentioned Shriram Transfer Finance also doing better. So probably a group that is to be watched out in the future. But one stock that is doing very well today in the session, and we mentioned it earlier in the show that it will probably be in the limelight, is Tanla Platforms. Well, we mentioned it earlier in the day that the quarterly earnings for March quarter were pretty strong if you look at it from a year-on-year basis. But on a sequential basis, there was degrowth. But I told you, Santo, that market will take heart from the resilience the earnings have shown in the March quarter, and the stock was, pretty high, higher in trade as of going live. And now the thing is, what to do from here on. Now the argument out there is that Tanla Platforms, since the time it started rallying from July 2020 so far, from rupees 100 to going to as high as 2100, it has always taken support at its 200 DMA, right? And right now it is hanging around close to its 200 DMA, which is about 1360 rupees. The argument here is that if it sustains around this range and we see a very strong up move backed by good volumes, then probably that will be the sign for some of the new investors who want to get into the party to start accumulating the stock. For the longer term investors who have been holding it from 100, 200 and 500 odd levels, I think they continue to hold. They should not be concerned about some short term consolidation in the stock at this point of time.
The last stock on our radar today is Indian Hotels. Stock continues to have a good run, and although CJ here was a bit skeptical about the company's fourth quarter earnings and kept
it was a howler. It was a howler,
on the point that adjusted for whatever there would have been a loss at the operating level.
It was a howler. You ask anybody.
Well, the stock price is saying it all. Overall, the market seems to be quite bullish on the reopen trade, and some analysts, in fact, many analysts have said that the average revenue per available room for April 22 has been in line with what was seen during the pre-COVID level. So that's saying quite a bit. Besides, you have people resuming their holidays, meetings, weddings. All these things make Indian Hotels, which also has among the best balance sheets in the industry, a good buy.
How many weddings are you going to?
Not all of them at Indian Hotels.
Anyway, I just feel that market is just giving the benefit of doubt to the management, given that overall the past 1 year the quarterly improvement in earnings has been there, no doubt. But the March quarter earnings, probably they're just seeing as a blip in the radar, and probably nothing more to read into it. Of course, the June quarter earnings will tell us and give us a clearer picture whether there is something to be concerned about or not.
Right. Yes, and a quick take on the market at this point.
Let me just open my money control app.
Nifty Bank is now in the positive, up by about 94 points.
Well, markets are almost flat. Nifty is down just 0.2 and Sensex is down 0.1%.
Yeah, that's a good comeback. I think a lot of short covering being seen.
Yeah, but with the point of concern is the mid cap space. The Nifty mid cap index is still down about 0.6%, although it's off its day's low. But we are seeing a greater selling intensity in the mid cap, small cap space than in the last cap.
That is where most of the new investors are, so I'm not really surprised.
We were outperforming at one point of time. You weren't surprised then, were you?
Yeah.
Anyway,
so CJ, what should be investors looking at?
Well, tomorrow they should not be looking at anything because tomorrow is a trading holiday on account of Eid. But Wednesday, when trading will resume, earnings will of course be at the top of the mind with companies like Hero Motor Corp, Tata Steel, Titan coming out with their earnings in tomorrow, and after that we have a few other big shots coming up. Almost 3 Nifty earnings coming up on Wednesday, and of course Wednesday would be the second day of the US Federal Reserve's rate setting meeting, probably the most important rate setting meeting that the Federal Reserve has done in recent memory. We do not yet know whether it will be a 50 basis point hike or a 75 basis point hike. 75
seems a little bit of a stretch at this point in time.
If you go by the sort of commentary that is coming in, people are not ruling it out yet. Yes, 50 basis points is a given at this point of time. If you go by the sort of probability that the interest rate market is giving, 50% almost looks like a given. But whether they will go even beyond and go into a 75 basis point territory would probably will decide where this market
Probably
is headed
the
for
Fed
the rest
does
of the
want to give the signal that it means business this time.
Absolutely. I mean, I think signaling is everything that the Fed can do at this point of time, given that it is still very, very much behind the curve in terms of tackling inflation. So signaling is all that they have.
Well, with that, it's a wrap on this edition of Markets with Santo and CJ. I hope you enjoyed watching this show. We'll now let you get back to your trading terminal.
Yeah, and please post your feedback on the comment section below and follow us on the social media links that you can see at the bottom of your screen. We will see you, on Wednesday morning, sharp at 9 a.m. Till then, happy Eid and have a great, great holiday tomorrow.